Hello YouTube and hello After Hour. My name is Rise and welcome to my first video of my new channel, Rise After Hour. I'm not actually affiliated with After Hour, but anyone who tried to ever make a name on YouTube knows that you cannot make a single word name anymore these days. You've got to have like either 100 numbers or something else. And I am coming from After Hour based on a post that I put there of would people be interested in some YouTube videos on different topics? And the answer was overwhelmingly yes. So here I am. I'm going to be talking about all things trading. That could be options trading, derivatives trading. Certainly, we'll talk about things like market commentary, how I enter trades, why I exit trades, all that fun stuff. Although that's too many topics for a single video, obviously. So today we'll be starting with just covered calls and maybe a little bit of cash secured puts before we get into future topics, ultimately culminating in the wheel, which is something that I wrote a lot about on After Hour. And this isn't really intended to replace After Hour. This is purely just in addition to where I can talk a little bit more than what takes a long time to type up a post on After Hour. Hopefully it works. Hopefully you guys enjoy it. Please leave some comments with what you want to hear me talking about and what you don't want to hear me talking about. Certainly, I'm open to feedback, but just be easy this first time. This is my first video. I'm not doing any editing. You're literally just going to get stream of consciousness going at it the first time. And hopefully it's good enough to post on YouTube. Otherwise, I suppose you'll never see this. But anyway, a little bit about me. Again, my name is Rise. I've had that name since the late 90s on AOL. The original four-letter name, which some of you will appreciate the significance of that. Everybody else probably would say, whatever, that's cool. And I've been going by that name ever since. So I like it. It's apparently very appropriate as I get into the thing in the finance world, right? Where you want things to rise, ideally anyway. And that's what we're hoping to accomplish here, and hopefully some of you can have that same effect on your portfolios as we talk through this stuff. I'm 42 years old. I'm recently laid off in November. I guess it's becoming less and less recent as time goes on. And so I've decided to give a shot at full time trading. I wouldn't call myself a day trader. I would say I make a couple of trades every day, but I'm not even sure I'm qualified as a pattern day trader, PDT on Fidelity or some of the other places that I trade on because it's just not that frequent for me in terms of how I like to trade. And we'll talk about that as we get into things. But I historically I have been in operations up to and including executive roles in running multiple factories that make everything from aerospace components to sticky paper and all sorts of different things. So I've got some good experience from the corporate world, but I'm tired of being held down by the man. I just don't want to go back. So I figured I'd give this a try. And so far it's been pretty good. And that's another thing. I will full transparency share what I'm doing, what my results have been with actual numbers. You can see numbers on the screen here. Those are most of my portfolio holdings. Not everything is synced there, but it gives you a good feel for what I'm actually doing and what I like to invest in. And we'll talk about a lot of those individual tickers and stocks and equities here in the future. But enough about me. You came here to hopefully learn something about trading and options, and we're going to get into it right now. We're going to talk about covered calls. Well, okay, I guess I probably should put the disclaimer. I don't know. I don't know why everybody talks about the disclaimer of how this isn't financial advice. There must be some large history of people getting sued that I don't know about and probably should know about. But this is not financial advice. This is financial education. Hopefully, and really, any trade that you enter, you need to fully believe in yourself. You need to do your own due diligence, and this is less of a disclaimer and more just life advice as it pertains to investing. Um, you need to take responsibility for your trades. Whatever I say or anybody else says, no matter how much money these guys have that you see on apps like After Hour and whatnot, you need to ultimately believe in what it is you're trading in because it is your money and nobody's going to come save you if you make a bad trade. So, because of that, My disclaimer is more take responsibility for your trades with your money, whether they go up or down. And it's fun to take responsibility when it goes up. I know, like everybody, you'll see posts all over the place on After Hour, like, I just made all this money. And then it gets quiet when things go the other way. So it's not that you need to celebrate the losses, but take responsibility and ownership for those things that you've done. And if they go against what you thought they were going to do, learn from them, right? And that's really what we're trying to accomplish here is continuous learning and getting better because the market will continue to evolve and has since its inception, right? Think of how technology has changed. And today it's changing right now. Literally, there are crazy things going on with AI and quantum, what do they call it? Quant trading. I don't do that stuff. We'll talk about that a little bit, I guess, in the future, but not really the topic right now that I'm interested in talking about. So, anyway, let's get into, I guess, some of the basics. I do think you probably need a base level of understanding to get the most out of this video. Really, you need to understand the absolute basics on options trading, which includes things like you need to get approval in your account to even trade options, level one, level two, etc. Level one is the basics of calls and puts and covered calls and selling puts. And then the other stuff that you need to be aware of is that option contracts are sold in lots of 100 shares. So when we talk prices of buying or selling an option for $3.50, that's actually represents that's the individual share price, but you're always doing that in a batch of 100, which would ultimately say that you're exposing yourself to or premiums are actually going to be in the range of $350, right? So if you understand those very basics, cool, we should be good here. If not, I will put some links below for trading basics. Everything that I'm sharing, at least right now, probably forever, is free. I don't make any money on any of this. I'm just looking to share what I know, and hopefully you enjoy it. I don't have anything to sell you. I don't get anything from After Hour by having them up on the screen. Maybe I should. I don't know. But this is purely educational and helping us all get better. So certainly, as you hear things that I say, please again leave comments. Let me know what you think differently. Let's try to be civil, right? Let's like not be jerks about it because at the end of the day, who knows who will be right and who will be wrong until the time passes and we find out. But anyway, all right. So now that we got through the disclaimer and the basics and about me, a little bit on the topic of options themselves, I personally believe that you should learn options from the perspective of the seller before becoming a buyer. Now, you can make money on both sides, most definitely, and people do. I personally very much like selling options as it is most definitely a little less risky than buying an option. And that's simply because in buying an option, you can buy some crazy stuff that has stated low probability of hitting and the seller has a stated high probability of hitting because that's the flip side of it, right? So an option contract is between two parties, a buyer and a seller, and that's buying a call and selling a call, or buying a put and selling a put, right? Those two things make up that transaction and contract. Um, I think it's important to focus or start with the selling of contracts because I think you get a better learning of what's happening here. And the transaction is very important in terms of what all is going on. So, as we look at covered calls as an example, we would be selling those versus buying those in this instance. So, where do we want to go from there? Well, I guess I can start by talking a little bit about, let's see, trading window here, where we have a chart up that is hurting my heart a little bit, Reddit, and where we want to go with selling covered calls on this equity. Now, Reddit is a company that if you look at my chart here, I have 900 shares. I can't point all the way down, but it's probably right about there. I got 900 shares of Reddit across a couple of different platforms. And in Fidelity, I've got, I think, 300. Yep, it says it up here. And Reddit is one of my favorite companies to sell covered calls on. And the reason it is because it has fairly high uncertainty, which is also known as IV or delta. And that translates into a higher premium when it comes time to buying or selling, meaning it's an expensive option to buy, but that also means it's a nice option to sell if you're confident in it. Now, that is a key point of anything that we talk about selling or buying options on. Generally, I recommend it being a equity or stock that you want to own or you'd like to own or you wouldn't mind owning if things go awry. And that's because in the case of covered calls, you have to own it, and there are naked calls and things like that. But for specifically for covered calls, you have to own the equity in lots of 100 shares, which is why I have 900 and 300, and talking about even numbers there. If you want to sell them, and I like the stock Reddit personally, so I don't mind if I get assigned on one side or the other of that equation. And we'll talk about that here in a little bit, what that means to be assigned. So, in the case of Reddit, I've got a chart up here for the 3 month chart. And the last month has been quite painful. So, if you were to look at where you might sell a covered call on Reddit, you'd ask yourself, do you want to sell a covered call down here? And the answer is generally no, unless you're looking to get out of a position. And that's something that covered calls can be used for. You can ideally exit a position at a specific strike price that you're interested in exiting at. Cool, right? So you can use it as a mechanism to sell your shares. But most people are selling covered calls to earn premium and money off of those shares, in addition to the appreciation that they expect over the long term. So, with that in mind, if the stock is at a low point and you think it's going to go up, well, here at this price, the stock was what, 135 or something like that, right? It probably says somewhere exactly on here, but I'm blanking. There it is. Sorry. It's, yeah, 135. Cool. And shortly after, about a couple of weeks later, it hit a high of 180 and closed at 167. Okay. So if I sold a covered call here, what would I have picked as a strike price? I probably would have said, hey, man, 150 seems great, right? Like it's a little bit beyond where we're at right now. More than 10% of the stock price, 10% would be at 135, would put you at what, like actually, it's pretty close, but call it 148, something like that, right? Um, so 150 would seem like a safe price to sell at. It's just not doing a whole lot of technical analysis, just as an example. But if it closed on a Friday and expired here in the money, well, you're going to get assigned. And that means that you are obligated then to sell the shares at that strike price of $150 and give them away whatever they got on top of that. So say it closed at 180, not at 167, or actually 167 is fine as well. You're still selling it for 150 if that was your strike. Now you earn the premium on top of it. So let's say you sold it for $5 a share in premium, which would equate to $500 per contract. Your equivalent would be about 157 or 155, but you would still be losing on paper $12 per share. And that is the risk of covered call. However, it's all profit, right? Assuming your cost basis was below 150, that's all profit. So it's like, wow, I only made so much money. But that's what you have to keep in mind. And the flip side is true on the cash secured put side, which means that you're selling a stock that you don't own, betting that it won't go below a certain price. Or if it does, you're interested in buying it for that price. So it's hard to only talk about cash or covered calls and not include the other side of cash secured puts, but mostly we'll try to talk about that in a future video. So on this chart, if you look at where I would love to have sold and actually in many cases did sell covered calls, it's at these high points, right? It's like, hey, I actually probably sold them here. In hindsight, I'm not even. I'd have to like look through my my track record here specifically, which I do have. Actually, I can show you that real quick. There's our heat map for today. I do keep track of all my trades that I make here, and you can see since November I've made quite a few. And anytime that I'm selling covered calls on Reddit, there you go. I've got the premium that I got, um, and the strike price that I sold them at, and this is the current price. It wasn't the price at the time. This is a live pull from Google Finance. But at the time, when it's live, that's more meaningful to me. Like when I'm looking at my open trades today. Um, and anyway, that's what I like to log for everything that I do. So this translates to actuals, and we could actually go back and find out exactly where I sold them, but I'm not sure that's worth the effort. I will tell you that I probably sold them up on these green days. A couple of green days in a row is a great rule of thumb. Again, it can burn you, right? Like if you end up here using that rule, you might get burned, or even here. Um, and that's the risk that you take. So one other thing to keep in mind in selling covered calls is what type of account you're selling them in. If you're selling them in a taxable brokerage account, that means that you might incur tax if you sell them at a price above what you bought them at. You also incur tax on the premiums that you net out. Excuse me. So you have to take all this into account when you're placing a trade. Now, for me, I like to put my strike prices pretty far out in my taxable because I don't want to get assigned generally. If it happens, it happens, but I try to make that a little less likely and play longer swings with dates that are maybe out a month or 2 months. Whereas my IRA or Roth IRA, I might be making trades that are end of the week or next week. And if it gets assigned, whatever it is, I'll just buy them back with cash secured puts that following week or whenever it makes sense, of course, based on where things are at in the cycle. So again, a lot of tangents here. Apologize. First video. Remember, give me a little bit of break on that. So let's get back to what we were talking about, which is I would and probably did sell covered calls at these peaks. And then you can either wait to expiration or you can take advantage of the time value of money, which is a made up phrase of buying them back. You can buy them back early. So you sell a covered call, you receive premium, and in that transaction, you have in your account, like here, I'll go back to what I was just showing here. So let's go back to a Reddit covered call. Where those are too recent. Here we go. So this was a quick one where I sold some covered calls at a 200 strike in February. This is or for February 21st expiration, and I sold them in January. But I bought them back in January too because what I was looking at the time, I thought that I was risking being assigned, so I took advantage of a drop and bought them back. So I sold those two contracts for $2,100, 1050 each, right? So that's 1050 is times 100, so that's 1050 times two, 2100. And then I bought them back for 800 a contract to net $500. And you might say, Rice, why would you do that? Why wouldn't you wait till expiration? Well, I can guarantee you this was like a 2 day trade. So in 2 days, I realized 25% of the profit opportunity here instead of waiting for the entire length of time. And then I could just repeat the trade. In fact, you see it here. I did it again. Actually, these are a different account, different shares, but I did it again, and same deal. I sold them for 7,100. I bought them back for 5,000 and made $2,000 in like 2 days. Now, if you want, you could hold those to expiration, or what I like to do more frequently is wait to 50% profit to buy them back. Especially if it's before 50% of the time decayed, meaning let's say I bought them January 1st and they were expiring the end of February the 28th. If it gets the 50% profit before the 14th, I buy them back. And if it doesn't, I might actually hold them to expiration at that point because, again, the time value of money, it all depends. It all depends where it ends up for the maximum return on invested capital that I can get. So those are things that I'm always thinking about in terms of return on investment. You'll see I've got a little calculator I made here. There's much better ones on the web. This is literally if I want to type something in really quick, I can get hey, um, option cost here on the 21st will give me almost a 40% return. Is that good enough for me to make the trade? Maybe. Um, but this, I can tell you, I kind of wish I made this trade in particular because this drop went way further than I expected, and I would have already bought it back. So missed opportunity there. But now that I was essentially, this is post earnings, and I was waiting for a new channel to be established. And you can see there hasn't been like a new bottom found, or top was what I was really hoping for. Um, but we'll get there. I'm pretty sure with Reddit. But now we're at a point where I think we're probably going to be stable. So, like today, as an example, I'm expecting slash hoping for a green day where then I could say, okay, this could be a good time to sell covered calls on this stock. And because my cost basis in general is on average quite low, um, 63 across all the shares, because I bought more at 198, but most of my shares I bought at 45 in this particular account. So if I ended up getting assigned, the worst thing is I'd have a huge tax bill. So I'd have to worry about that. But otherwise, I would be coming out net positive on those trades. So anyway, that's a little bit about Reddit covered calls. I will also take into account other things. I will look at the macro of, hey, what's happening here right now. This is a little bit before market open right now, so I think this is all from yesterday. I'm hoping there's a lot more green today. Yesterday was a big red day across the board, as you can see. Walmart got crushed in earnings, surprising, but very much based on their guidance, not their results. So, depending on what's happening here, I might say, I'm not sure it's a good time to buy or sell options. This is actually a tool from a guy on After Hour, Warren Buffett. It's called the WBFIN tool. Oh, yesterday I was trying to make a video. I failed miserably, so I'm back, and I couldn't figure out what the FIN was. I thought it was Warren Buffett, and the F was part of the Buffett. No. WB is Warren Buffett. FinanceTool.com. I'll put the link below. It's got some cool stuff on it. It's got this and an economic calendar that I like to use, and he's got some other cool tools. And these are all you can click on these. If I had it zoomed out to how I usually use it, when you highlight over a cell, it'll actually tell you a little bit more detail. Whoops! Apparently, you can zoom in and out. And if you click on one, it'll take you to TradingView.com's chart and information on it. So I'll look at this. Some other stuff that I'll look at in order to try to make some decisions on, timing for selling calls or cash secured puts is I'll check out things like just the daily dashboard here, where I'll see if there's any big news coming on. If there is, that might impact the decision of like, oh, we got a lot of uncertainty in the market, which is true right now, especially with the current administration, a lot of crazy things going on. And I'm not suggesting anything politics related. Just there's a lot of uncertainty in the market. That's quite clear. And you might use that information to either do something or not do something. And a lot of people right now, I think, are hesitant to go all in on anything, which you should always be hesitant to go all in on things. Other things that I'll look at in making these calls, I always like looking at the top losers of the day. And Reddit was, I think, on there. They were getting absolutely crushed yesterday. Am I on the wrong page? No, I'm on the first page. Oh, there they are. Yeah. So, on a big red day, I might say, especially if there's a couple red days in a row, I might go, okay, now is a great time to sell cash secured puts. On the flip side, I'll look at the top gainers, and if one of my stocks that I watch is on it, I might go, oh, if I own them, this is a good time for covered calls, right? Like Unity is up 30%. That's wild. I actually was thinking they were going to go down. But if you own the stock, that would be, I think, a great time to consider selling covered calls on them. Now, keep in mind, post earnings, you are going to have a different level of volatility than pre earnings. So, those are things that you got to keep in mind too. Are there earnings coming up? If there's earnings coming up, you may not want to sell covered calls or cash secured puts because there's just so much risk of it doing something wild. It can work out for you for sure, but and certainly the premiums can be really attractive, but you've got to be very solid on what your thesis is going into that type of trade. There, other earnings are also something that I'll keep in mind. I'm showing the wrong screen here. Sorry, I was looking at the top gainers and top losers here on Yahoo. And then if I were to consider specific earnings that I'm interested in, like Rivian as an example, because I do own some Rivian stock, um, I chose to sell covered calls prior to earnings, and I sold cash secured puts. So, good news, I make money on the covered calls, and I don't know if I call it bad news, because again, it's a stock that I want to own. I'm going to get assigned most likely on the shares that I sold cash secured puts on, which actually expire Friday, tomorrow, today. So I'll get assigned those on Monday if nothing changes from what we saw in the overnight, where it's down like 8% or something. But that's cool because I think it's a company that I'm interested in owning for the long term with a lot of the stuff that they got going on. So all good for me. I'll probably buy back my covered calls today, and then wait for a couple of green days, which certainly stocks can keep going down. Keep that in mind. But if it's one that you believe in, there's a high probability that, if you've got a good thesis, it should over time go up, unless you're shorting the heck out of a stock. In that case, you're probably not selling options on it. You're probably buying options in those cases. Although I suppose you could still sell options on it. So that's a little bit about how I go through option thought process at a very high level. We didn't get into any detail on specifics. I think next week I'll probably make some videos on like actual trades that I'm going to enter. Ideally before I enter them, but I don't know. It depends. If there's a good position, I'm going to enter it. If you're interested, though, I could live stream this too on YouTube or Twitch. I have a Twitch account that I have not used in a long time. Well, I mean, I watch stuff, but I haven't streamed in a long time anything. So let me know, and we can do something like that, and maybe do it together live. Where if you got questions, I can answer them straight there. So, anyway, that's a little bit about covered calls, how I think about them, and there's so much more to talk about on that topic, which I'll save for another video. But like I said, let me know if you like this video, if you like the format, if you think I should be showing different charts than what I'm showing. Cool. I'm happy to hear all that feedback. And anything that you think that I could be doing better, that'd be great. I will, if I live stream the videos, I can make them as long as whatever, it doesn't matter, hours, I suppose. But in the case of these videos, I'll probably try to keep them in the 20 to 30-minute range, so that there's enough time to really dive deep into the topic, and also if people are asking questions, to answer questions. So that's all I got for you today. Thanks for joining me, and hopefully you learned something today. If you did, let me know what it was, and I'll see you in the next video. Take care. Happy trading.